Good morning, ladies and gentlemen, and welcome to Morning Markets here on the True Potential YouTube channel. Before we start today, I'd just like to recommend coming up this afternoon on the channel will be the Do More With Your Money show, and that's going to be an ISA special. So please do subscribe to the channel and join us later today for that. This morning, we've got Matt Henderson, Portfolio Manager. And Matt, just in terms of yesterday's markets, the start of a new month, is it a good start of the month? What are we looking like?
Hi Graham, morning, thanks for having me back. So yesterday, bit of mixed performance depending on what equity regions we look at. So closer to home in Europe and the UK, we've got investors really focusing their minds on inflation, sort of the energy supply dynamics that we've currently got going on within Europe, and also the threat of higher interest rates. So market participants starting to price 75 bips interest rate hike, so 0.75% from the European Central Bank, and that's been weighing on equity and bond market performance. So yesterday we saw European equities down about 1.8% for both Europe broadly and the UK. Slightly different story over in the US, however. We had the ISM manufacturing that we'll touch upon later in the show this morning that came out positive reading. So US opened it up negatively following Europe's footsteps in the morning, but actually ended up closing higher by 30 basis points.
And we can see that on the ticker on the bottom of the screen in terms of the US doing a little bit better, and I guess that's the diversification in action one region will do. So what is the US ISM, and if you just go in a little more depth on that?
Yeah, absolutely. So ISM gives us an indication of the health of the manufacturing sector in the US, and as I said, the overall reading came in actually the same as last month's reading, but higher than what markets were actually anticipating. But within those underlying dynamics or components that build up the main index, there's subcomponents that we can look at, and there's actually some good readings coming through, seeing strength in new orders, so showing demand still there, improvement in the employment side of things. So as we know, there's been challenges with labour markets this year, and then we're also seeing lower prices paid. So last month when we covered it, we saw a fall of 18.5%. This month we've had another fall of 7.5%, so significant falls given what we've seen come through in commodity markets, and we're also seeing lower lead times in terms of production, so all positive things.
Yep, something we'll continue to monitor. And in terms of today and what's coming up today, what is it you and the investment management team will be looking at?
Yeah, so what will be taking up investors' minds today is the non-farm payrolls out of the US, so just showing how many people got new jobs in the US, and once again playing back all into this theme we've had this year of central banks. US Federal Reserve will be interested to see how that number goes, so mainly play through in interest rates and then the feed through effect that has to other assets.
Is there any expectation or signalling in terms of what you'd expect there, or is it wait and see?
So markets are expecting jobs to be added, but once again, Graham, it'll be a wait and see job.
Yeah, so what we'll do is we'll cover that on Monday and also update everything else next week. So please do subscribe to the channel and join us next week. And also, as I said, later today, the Do More With Your Money show, it'll be a ISA special, so please do enjoy that. Thank you, Matt, for today.
Thanks, Graham.
Good morning, markets, and it's been a good week, so thank you everyone for watching, and we'll see you next week. Bye.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.